Hello, everyone. I'm Gary Allen, and welcome to the webinar. I'll be your speaker today, and we're going to be talking about your law firm's financial report card. Before we dive in, for those of you who are members of the Association of Legal Administrators, welcome. This webinar is approved for credits from the ALA as indicated on this slide. If you're not a member of ALA and are interested, it's a great organization, both from a standpoint of providing education, including a certificate of legal management certification, as well as just a great community of legal administrators. So hope you'll become active in the organization. So we're going to talk about our financial report card in a story today. So it's once upon a time at a law firm that was much like yours. We're going to be talking about a firm called Dalton and Finch today. It's a fictional 20-lawyer business and employment law firm, serves clients throughout the Northwest, and they've got a lot of problems. So their profits are flat. They have high partner burnout and rising associate attrition. So all is not well at Dalton and Finch. There are two leaders in this firm. Felix Finch, who is the founder and managing partner, great lawyer, but kind of a reluctant leader, like a lot of lawyers, very interested in practicing law, maybe a little less in management. And the firm has just brought in a talented office manager. She has an HR background, but this is her first job in a law firm, and she is new to this job. The firm behind the scenes is having some real troubles. So the lawyers, as all lawyers, want to focus on their landing their clients, winning their cases, and closing deals. But the firm has lots of distractions. The billing is slow and error-filled. The collections lag. There is a lot of overhead bloat, feuds over compensation, succession worries. You see a lot of closed-door conversations in the hallways, that sort of thing. And this rising star is polishing her resume, which spells big trouble for the firm. Meanwhile, inertia blocks progress, as it does in so many law firms. The lawyers are going to practice law, but Sharon is herding cats all day. It comes in a lot of forms. Many of the lawyers want to do things the way they've always done it. That applies to staff people as well. There's a lot of fear and skepticism that's protecting legacy systems in this firm's. I'm sure many of you on the call will relate to that. And there's always something else that's more important than trying to take the firm forward. Then disaster strikes. So Felix learns that the rising star, Anna Wang, has sent her resume to DNF's biggest competitor. So Felix and Sharon meet and try to figure out what to do about this, and they can't settle on a good answer. So things are looking bleak at Dalton and Finch. Is Anna's departure going to topple the firm? So I want to stop this right here and kind of take stock at this point. So there's been, there's a big problem at this firm. And I wanted to, let's see if I can, I'm going to allow all of you to talk here. Don't make me regret this. So that we can have more of a conversation here. Let's see. All right, I think I got everybody almost. Wait. Okay, so all of you are able to speak if you want here. So has anybody faced a situation like this in your firm? where you've had to deal with, a crisis like this that's kind of existential, or it might lead to the whole big problems in the firm. Please speak up, or I saw some thumbs up uh, like that. I guess that's a thumbs down for a thumbs up. Um, and uh, Now you're all being a little bit shy here, but let me just say a thing or two here. It's easy to look at a situation like this and think, oh, that's a personnel problem, so we need to sit down with Anna and see what's going on and see if we can work this out. And certainly you need to do that. And we've kind of set up the situation where things are fairly far down the road. So in the real world, it might be too late to salvage this situation. But let's just say that, we've got a shot to turn this around. Um, and I think my thought is, uh, maybe we need to look a little deeper than just what's sitting on the surface in front of us, that Anna thinks she might be able to get a better uh, job offer down the street. She's invested a lot in this firm. Why is she just going to walk away? Um, so I'm curious what any of you have to say. I mean, do you have any thoughts about what you would do here? Um, and feel free to speak up if you've got any thoughts. Again, I will put my 2 cents here in a minute, but this firm is in a bit of a pickle as we sit here. So let's see where this goes. So it's Felix who is despairing at this point. He hears a voice. So he returns to his desk and a voice calls out, this was likely in his email, Felix, if you're going to fix your problems, you have to know your numbers. Attend the report card webinar. So Felix, in fact, does that, and they meet a guide. That's me, who has been through this before. So why do I think I have anything to say about this? Let me insert that at this point. So I was a practicing lawyer for nearly 35 years. And early on in my career, the first firm I went to, when I graduated from Stanford, all of my classmates were going to huge law firms all over the country. I didn't want to do that. So I started with a mid-sized firm, wonderful lawyers, wonderful people, but they weren't really business-oriented people and really didn't understand the business of law. So that firm imploded within 2 years of my beginning my practice. I was fortunate to land at a good firm, but had moved on from that later on. A few years later, that happened to me again in a branch office of a mid-sized firm after I'd moved to my current home in Boise. And again, it was a problem that the business was not well run. It had extremely high overhead and was not a good fit between the branch office and the main office. And in that case, I got a call from the managing partner on a Saturday afternoon, and I was told I didn't have a job, and I was sitting there with a 6-month-old baby to feed, not knowing what to do. But then I got lucky. I landed with a firm that really understood the business of law. And over the course of the next 30 years, I built a $1 million practice, built and rebuilt a $1 million practice, and learned what it took to run a firm that was highly profitable and did the business of law very well. And, I've kind of boiled down what I learned there. And, I feel very grateful for that. So I want to share some of what I learned so others can enjoy that. I do these webinars all the time, and it seems like about 20 to 25% of law firms have this figured out. But there are a whole lot that don't. I want to help to make law firms better businesses. Along the way, I started a software company called Lean Law. It's a financial operating software for law firms. It does it customizes QuickBooks for your timekeeping, invoicing, reporting, and trust accounting and other legal specific functions. Integrates with other software in a core stack. I did that because I didn't like what was happening with the all-in-one software in the market, that it was promising a lot and not delivering what it should. So I wanted to bring what I call and what we call at Lean Law a best-in-class mentality and tech stack for people who want something that's more tailored to what they need, doesn't give you a lot of stuff that you don't need, and basically gives you a better fit for the software in your firm. We're not here to talk about that today particularly, but in the course of building Lean Law, what I've discovered is, I've talked to hundreds, if not thousands, of law firms in doing that, is that there are a few of them who have figured out how to run a good financial law firm with good financial practices, and they all are doing essentially the same thing. And there are three primary drivers to that we'll talk about later in the webinar. But so I talk to a lot of people like Felix and Sharon, and hopefully can help them to improve their business. So how did that conversation start? So Sharon asked, we just need to get past the chaos in our firm. And my response is, there are two things that you need to do. The first one is to understand where you are. And that's what the law firm report card is about. And it's an Excel sheet. You all should have gotten one before the webinar. Unfortunately, I didn't, if you didn't get a chance to send it back, we'll have another opportunity to do that. So what the report card is it's essentially the warning lights for your business. It has some basic financial metrics for law firms that are good for showing where you have problems with the profitability of your firm. And so we'll talk about each of the pieces of that as we go along. Step two, as I said to Sharon and Felix, is to implement the three pillars of best-in-class profitability. These are these secrets that I was talking about that I learned in my firm, that I learned as I built my practice, and then that I have seen in other firms who have figured out what's going on there. And there are really three parts to that. And we'll just talk about them briefly here. The first one is you need efficient processes. Another way to put this is you want low overhead relative to your revenue. And that's helped a lot if you have good software and other things like that in your firm, good processes. So that's number one. Number two is productive people. And, you don't want people who are not covering their costs and who are not particularly profitable for the firm, collecting big salaries and things. This usually manifests a good practice here is objective compensation and production-based compensation. So people are paid based on how hard they work. The firm doesn't take as much risk as to whether they are profitable or not. That's very helpful. The third is product and service alignment. If you are doing a lot of low value work, it's very hard to create a profitable law firm. So in my day, the easy way to accomplish product and service alignment was to create a niche or find a niche where you didn't have a lot of competition. You had well-defined clients who you could find, and you raised your rates. And that was done dozens of times in my firm. These days, it's more complicated, and there are more of you who are dealing with things like fixed fees and how do you work through all of that. We have a whole nother webinar about how to do that in an intelligent way, in a way that's going to allow you to have a higher profitability. So in 3 minutes, 5 minutes, that's what you do once you have figured out where you stand based on your report card. Now let's dive back into that first step and talk in more detail about how law firms make money. So fortunately, that's pretty simple math. It's just your revenue minus your overhead equals your profit. And that applies both to individual attorneys as well as to firms. And there are 5 elements of profit that you want to be looking at. One is capacity. Second is utilization, then realization, collection, and overhead as a percentage of revenue. Now, as I mentioned before, these are kind of the warning lights for your law firm. You may use other metrics for your day-to-day stuff, WIP, billed, collected being the main one that we see. But these are the ones that are going to give you kind of the big picture notice that you've got a problem in some aspect of your business. All right, so let's talk about each of these. So capacity is, and let me start all of this by saying, there's not a book that says, here's what all of these metrics are and how they're defined. So I'm filling in a few gaps from what you find out there, and I will say the market is not completely consistent how it uses these terms. But I think the way that I'm using them makes sense in terms of an entire system and the goal here of creating warning lights for your practice. So the way that I have seen capacity defined is it's your capacity in dollars to sell services into the market. So just looking at a typical lawyer's work year, say it's accepted that a lawyer will work 50 hours a week. That's 2,400 hours over the course of the year. Of that, 800 hours would be not total a non-billable time. That means that your worked minus your non-billable time, that's your billable capacity, 1,600 hours. A familiar budget. My firm was always 1,800. Other firms are higher. Multiply that by an average billable rate, and you have a $480,000 capacity. Now, if you want to increase your capacity, one way to do that is to reduce your non-billable time. So if we only expect people are going to work 600 hours non-billable, which is realistic if you're not in a management position, I would say. Okay, now you've got an 1,800-hour capacity and a $540,000 capacity. Another way is to increase your rates. So if we now have the 1,800 hours and you're able to command an effective rate of $400 an hour, now your capacity is up to $720,000. So what matters about capacity? And, this probably sounds pretty basic at this point, but I think it's important to understand what this is for and why it's important. So this is where you set boundaries. And I think boundaries are actually the most important part about your capacity and your goals. So I think, it's important to track hours and goals, and this should mean something. It's one thing to say, oh, I've got a total capacity of 2,400 hours, But, gee, it's much better if I work 3,000 or 3,500 hours. It's not. That is unsustainable and just is going to give you a whole bunch of problems down the road. So at that total hour number, that is where you get to set, your lifestyle. That's where you get to reserve time for your family and figure out how you're going to have a life while you're practicing law. And so, when you set that number, mean it, and that will help you a lot going down the road. To be perfectly honest, I was not great at this. But it kind of worked out over time anyway. Then it's also important to understand non-billable goals. That time that you spend on administrative matters of various kind, whether that's marketing or billing or firm matters of various kinds, that time is important. I mean, when I worked at the branch office of a regional firm, they acted like it was nothing to make me spend a lunch every day doing in some departmental meeting or whatever. And that, that's just the price you pay for being a lawyer. Well, all of that time's really valuable because you could either be billing it to clients or spending that time with your family. So, you should be guarding that time very carefully. This is also where you set billable hours and rates so you can understand, okay, what will if I meet all of my goals, what am I going to be able to do? So if you fail to plan for capacity and fail to budgeting is another name you could use for this. You've just created a plan to fail. And usually, people fail by working way too much and producing too little for all of that investment. All right, so when we talked to Dalton and Finch, they had decided that 1,800-hour budget was appropriate. So they have a capacity of $540,000 per year per lawyer. So I'm going to open up our first poll and ask what your firm's capacity is. So we've got 500 plus, 400 to 500, 300 to 400, and less than 300. All right, we've got a few people jumping in here. Got a high producer, got a few of those. All right, so we've got a pretty big range here, actually, a few at the high end and an equal number kind of at the lower end of things. Okay, I'm going to end the poll there and share the results so everybody can see that. So again, we're doing pretty well on the capacity side in this audience. I think there are a few of you who may not be responding, but pretty good there. So all right, so I'll stop sharing that. And let's move on to the next element of your metrics here, and that's your utilization rate. And so this is just taking that capacity and figuring out how much of it you actually work. So this is a small rabbit hole here. So there are two types of capacity to talk about, and that was indicated on those slides earlier. One is your total capacity, so that's that 2,400 hours. Or is it your billable capacity? Is it the 1,800 or 1,600 hours? And you can do it either way. If you look at total capacity, obviously there's some expectation you're not going to bill every minute and you're going to need some non-billable time in there. And so 70% is pretty good, and it's going to vary based on the role. So if you're an associate, Brand new, well, you're probably not going to have as much non-billable time responsibilities. Maybe you could do 75 or 80%, and kind of just immerse yourself in the practice. If you're the managing partner, you're probably not going to do 70%. You might do 60 or even 50 or less. So that's kind of what you should be looking at. Now, if we're talking about utilization of billable capacity, should be trying to get pretty close to those goals, right? 95 to 100%. And as I mentioned, you're not trying to do excess hours. That's, you should think, I'm getting on my soapbox here, but you should think about that as a bad thing and not a good thing if you're billing more than you plan to. Now, what really blew me away as I was researching this some time ago is that the national average utilization of the total capacity for mid-sized law firms is 45 to 47%. So 20 to 25% below where you'd really want to be. So, this is the number one challenge that most small to mid-sized law firms have, which is they're just not billing enough time, that somehow you're, the staffing is wrong, or you're not connecting with clients well enough, and you're not using your capacity the way you need to. That was never particularly an issue in the firms that I worked for, but it is industry-wide. That's a pretty significant issue. So I'm kind of curious where our audience is here. So Dalton and Finch, when they looked at their utilization of billable capacity, it was 78%. And about that 30% off, about 48% of total capacity. So they have a challenge there. So we're going to do the next poll on utilization rate and see where you guys are. So I'm going to launch that poll. And remember, this is the total realization rate. So this, how much of your billable time, how much of your time is billable relative to your total time? So we're at 70% plus for the firms that have voted so far. So we've got some ringers on the call. And we've got somebody coming in a little bit lower. All right, give you just another minute or a few seconds here to vote. All right, not bad. So the group here is pretty busy relative to what the industry average would suggest. So I'm going to end the poll and share the results so you can all see that. Some pretty strong results there. Now I'll stop sharing. And let's talk about realization. And we talk about realization rate. This is how much of that utilized time, that revenue generating work, is billed to a client after any of your discounts, canceled fees, that sort of thing. So according to Clio, who does a nice study of all of this every year, in 2022, the national average realization was 82% for law firms. Now, a best-in-class firm is going to have a realization rate far higher than that. So 95% or more is what you're shooting for. If you actually do the work for the client, you should be able to bill most of that. And, there's some caveats here. If you have some firms kind of, they increase their billable rates to a point that gives them a lot of flexibility with clients. And so, less of that time is realized, but you still kind of wind up the same. Not talking about that, but, if we're talking about what you actually wanted to and expect to bill, you should be billing almost all of it. So Dalton and Finch, very average firm in what they were doing. So let's do another poll and see how you all are doing. So we've got a couple in the average rate. We've got another one in the best in class level. Somebody a little bit below that. Give you just let's see. Yeah, keep any more votes? Give you about 10 seconds. All right, I'm going to end the poll and share the results. So we've got a little bit of a gap here so definitely some opportunities on realization, a little bit of the, maybe a yellow light on some of these. All right, let's look at the next aspect of this, which is collection. And this is pretty straightforward. So how much of the invoice work actually gets paid? And the national average collection rate is 89%. Again, the best in class firm should be 95% or more. My firm was typically 98% roughly. All right, so Dalton and Finch right there at the average. And let's go back and you're probably tired of polls at this point. We're almost done. Let's oops. Let's see here. There we go. Wait a minute. Why won't that launch for me? Somehow it's not allowing me to launch this poll. I wonder if there's a limit. So anyway, looks like we will not be able to vote on the collection rate. That's usually the one where people are closest to the
I got it, Gary. The
oh,
poll's
you got it?
Yeah.
Oh, good. Thank you. What did I do wrong there, Molly?
We just had to stop sharing the other one.
Oh, I see. Okay. All right, so that has been launched. All right, give you just a little bit longer. Look like we could get a couple more votes here. All right, I am going to end that poll and share the results for a second. Again, we have another A student and quite a few of you in the middle. So a little bit of struggles on the collection side of things. And we'll stop sharing that one. And move on to the final aspect of your report card, which is your overhead as a percentage of revenue. So this one is needs a little more definition and discussion about what it is. So this is the expense per lawyer, which is not including distributions to producers. And there's two reasons to do it this way. I mean, one thing I want to talk about for a second is why overhead is a percentage of revenue. Because and the reason I like to do this way, and I think this is a really valuable metric, is absolute overhead is not very useful. A firm with $200,000 per attorney in revenue, if they have $100,000 a year in overhead relative to that, that's a big overhead load. If the revenue is $1 million per lawyer and they have $100,000 in overhead, that's not much of a burden at all. But so, if that's 50% and 10%, you can tell the difference. That's why I think it's really important to track overhead relative to your revenue. The other thing about it is, why are we not including the salaries and distributions to producers? Well, the reason is that you want to be able to determine if your lawyers and paralegals are being profitable. So what can you pay them and still make money for the firm? So if you have built in the salaries already, you really, can't see that as clearly as if you don't include those distributions. So using this definition, according to Law Crossing, the average overhead per lawyer is 45 to 50%. And that's consistent with what we see, in our, in various settings. But a best-in-class firm can have an overhead rate of 30% or less. So I was talking with a law firm in Manhattan the other day, which has revenues, average revenue per lawyer in the $600,000 range, but overhead in the $100,000 range per lawyer. So, 15 to 20%. They really have this dialed in very well, and it, you definitely can do this if you put your mind to it. All right, but just to make sure we know what we're talking about, what's included in overhead? I've gotten this question a bunch of times. So it's all your non-billable expenses: rent and utilities, office supplies and equipment, software, marketing and advertising, professional development, support staff salaries, insurance, professional memberships and subscriptions, all of that. Not included is, as I mentioned, all the salaries and distributions for your revenue generators. Associates and paralegals under this rubric should be treated as profit centers, and so you don't include them. Partner distributions and partner benefits to the extent they're paid by the firm. That's all kind of in the partner compensation bucket. So this, as I mentioned, again, you're determining the net value created by that revenue generator to assess their profitability and what they ought to be paid. This is just kind of the details of how to calculate overhead. I'm not going to go through that. Again, what we're shooting for is in that 20 to 30% range, and the average is much, much, much higher than that. All right, just a few other things about overhead. Don't get bogged down in the details. This is a warning light. It is not an end all and be all, and you can step over a lot of dollars to collect dimes if you're obsessed with your overhead. The primary focus in every law firm is revenue, and you don't want to lose sight of that. I'm a big fan of making your overhead transparent. We received a spreadsheet every month that had originating dollars, working dollars, overhead, and then what came out the bottom line to our accounts. And that created a culture where people paid attention to overhead, and where you couldn't sneak in your pet project or your second admin or whatever other things, sort of freeloading that you wanted to do for yourself as a partner, and kind of kept everybody honest about, the money that the firm was spending that didn't produce revenue. I think it's really important to have an overhead budget and stick to it. that, you got to keep discipline on the cost side of your business if it's going to perform well. And if you are, struggling and have a higher overhead level, sometimes you can just hold the line and, figure out how to increase revenue without reducing overhead. Other times, if you need to actually reduce it, be very realistic about that. If this is something where you're going to be able to save some headcount by implementing software, for example, do one thing at a time and set very realistic goals about doing that, because you don't want it to be super disruptive to your firm. So at the end of the day, Dalton and Finch overhead, pretty much by that average, they're at 48%. So now let's do one more poll and see where your firm is on its overhead percentages. Nice, we've got a couple A students here. Oh, somebody changed their mind. All right, a couple more. It's kind of all over the map. Ten seconds. All right, I'm going to end the poll and share the results. So I've got, we're kind of all over the map here as far as overhead. It is, can be one of the harder things to control, especially if you are also having revenue problems. But, apart from utilization, overhead percentage is where most firms struggle. All right, so that's where you are. That's, Dalton and Finch kind of has very average firm having a little bit of trouble in all of these things. So now let's bring this discussion back to the report card. And so I wanted to put this on the board just to show you what these sort of things can look like. And, these are actual numbers from my firm about 15 years ago. So you can see, what is possible, and that, I mean, these are actual numbers out of one of our reports. So we were at about 94% utilization. The billable capacity was set in a budgeting process. Realization at 96%, collection 95. We were probably not our best overhead year that year, so we were at 37%, but we still hit the mark when it came to profit. So, just know that, and this was not an exceptional firm technologically or anything. There's a few things that I said that we did well, and other things that we were very average at. But this is possible for real law firms to achieve best-in-class performance. So let's contrast that with Dalton and Finch. So they fill out their report card. Remember, they had 78% utilization, 83% realization, 89% collection, 48% overhead, and their profit is at 30%. So, right at the average. So what does that mean? Obviously, when we look at the benchmarks, they didn't do very well. But let's look at this another way that might put it in more perspective. All right, so if we now compare Dalton and Finch with a best-in-class firm, the numbers get pretty stark. And I'll talk about how this fits back into our story in a minute. So here's their capacity. We're going to say that that best-in-class firm is exactly the same there, just for a fair comparison. Billable utilization, 87 versus 95. Realization, 83 to 95. Collection here. Overhead here. So if you run the numbers on that, the profit per attorney in Dalton and Finch was 118,000. And, they're just an average firm. They're not a terrible firm. If you can now push that up to best in class numbers, it's almost 3 times as much. And that's just in 1 year. So each lawyer can make a couple $100,000 more in a best-in-class firm than in Dalton and Finch. If you put that over the course of a lawyer's 40-year career, it's 4.7 versus 12.7 million. So you're looking at $8 million over the course of a lawyer's career. That's just one of the lawyers. It would be a very large number. Multiply that by 20. It's 160 million over the course for the sum of the lawyers in that 20-lawyer firm. So if we now have that perspective and look back at Anna Wang, who is our rising star, the kind of lawyer any firm would want. Why is she going to stick around in a place like Dalton and Finch, no matter how good of lawyers they are, no matter how nice people they are? If she can find a best-in-class firm in her town that may be just as nice of people that are going to pay her 3 times as much money. So, to me, this is so important to look at the this foundational profit layer in any law firm, because you're just at such a competitive disadvantage compared to a firm like this if you are not hitting these kind of marks in terms of your profitability. So having said that, to Sharon and Felix, their light bulb goes off. Okay, so if we have weak profits, everything else that we do, every other problem that we have is magnified. Now, people don't make choices about what law firm to work in solely on money, but this amount of money is really hard to overlook. And, so it's going to amplify every other problem that you're having in their firm. And conversely, if you have strong profits, that's going to make those other issues you have maybe look like they're less important. And, frankly, what my experience was is it made the whole firm much happier than the other firms that I'd worked for that weren't so well run. So you have that advantage as well. All right, so in looking at any of these, I want to get any reactions about, what you folks are thinking, and did you have any light bulb moments here that you might be willing to share with the group? You can speak up in the chat or otherwise. If you have anything, here's something in the chat. Okay. Any thoughts from the audience? All right. I'm hoping that there were some good results on these metrics, but I'm hoping that some of you saw warning lights and that you are willing to, and it's going to put you on a course where you might go, oh, this is something we need to take seriously and take a look at, because if you wait until you find out that your best young lawyer is leaving and that may destabilize your whole firm, which is the kind of thing that I experienced a time or two, that's really unpleasant. But hopefully you can, find ways to get better, and I would love to help you with that if any of you are interested. And we'll talk about that a little bit more in a second. We've got about 10 more minutes, and I wanted to just spend a little time on step 2, which is, all right, now you know your numbers and you know where you stand relative to the market. What can you do about any of that? If you're sitting pretty and you're best in class, what I've typically found is that those are the firms that want to find more ways to get better. That it's like, how can I, how can I get even more profitable, even more efficient in my operations? But for the rest of the firms out there, what can you do to start to make progress? And as I mentioned, there are three places to look at, and this is stuff I've boiled down over the years. You can start looking at your processes, and really what you're trying to do is get that overhead percentage down here. Now, there are other things that processes play into. They play into all of these areas, but that's the primary one. And if you're looking at lower overhead, it's typically the staff ratio, staff to attorney ratio, that shows that as much. So, hopefully that can be addressed by being able to, grow your practice, hire more lawyers, and keep the staff levels the same because your operations are more efficient. And we can show you lots of ways that your processes can be made more efficient with improved workflows and technology, if that's where you want to head on that. In terms of people, again, I'm a big fan of a predictable and fair and trustworthy compensation system, which typically means a formula, although it might look different in some firms, as well as having some form of succession plan. Because if you're going to have really good lawyers who want to have a career in a firm, they are going to, need to understand that it survives the retirement of the founders. And your product and service alignment, I know a lot of you are talking about fixed fees these days. You need to be able to figure out what those need to be. There's a process called design thinking that's very helpful to do that. And you need to be able to both bill and understand the profitability of those products, so that you've got to make sure that your technology stack supports that. So that's just a little bit on what that next step looks like. Now, if you look at the report card that we sent you, it's got a bunch of strategies that you could look at. And we wanted to just show you that you could do relatively small things in your firm, and it has a relatively large impact on your bottom line. So these are all things that Lean Law's software does, because that's what we're most familiar with the benefits of. And you can check the boxes just to see how they improve your profitability. You could do that with other types of improvements as well. But what we want to do is show you that it's possible, and it actually produces results if you undertake improvements. It is not a lost cause to improve your bottom line significantly. All right, so we are coming to the end of our time. You're going to receive an email after the webinar. It'll give you and a chance to review the slides and the recording, of course. I really encourage you to return your report card. We keep that information isn't shared, and and we will produce a free profitability report that you can look at, not just where you stand relative to the metrics, but also how do you, what things could you do to improve them? I would be more than happy to have a free strategy consult with you if you would value that. I've had some really great conversations with both our own customers as well as others who've attended these webinars to get deeper into how to make their companies into better businesses. And then finally, we're playing around with the idea of creating a course, which is a little deeper dive into your profitability. And if you're interested in that, just get on the wait list, and then when that's ready to roll, you'll be able to see if that might be a good fit for your firm. So the clock is ticking on everybody's career. I'm amazed how fast mine went. And I would like to be part of, and Lean Law would like to be part of building your firm's transformation. So, please reach out in one of these ways, and we'll give you a positive experience and hopefully some advice that you can use. So we have just a couple more minutes. Does anybody have any questions? Someone has asked if they did not receive the report card. Well, you'll get it again after this. And we do have a question from Rachel. Thank you, Rachel. So any suggestions on collections on past due AR, and at what point do we write off balances, and best practices on continued collection rate to get to 98%? That is a great question. So, once you have overdue AR, you're pretty late in the game. So the improving collection starts with your relationship with your client. Are they somebody and who you trust is going to be able to pay their bill so that you don't have to worry about collections? That's number one. If not, ask yourself, why are you not asking that client for a retainer? And do you have the tools to make that collection of the retainer, and how all of your trust accounting works and everything easy and automated? Because I think a lot of law firms shy away from retainers because it's kind of a pain if it's a manual process. So don't be the bank for your client if you don't have to, is the next thing I say. Number three is you need to have before something becomes overdue, there should be some process that you have, and a predictable, repeatable process that actually happens to be following up with clients about their collections and about their bill and about their where they stand with your firm and how they're feeling about how they're being served, that kind of nips all of that in the bud. And what you want to avoid is getting so far into a matter that you can't leave, and then you're just piling up receivables, and the client is prejudiced, and it's very difficult to leave and very difficult to sue firms, sue clients for unpaid bills, because they may well the typical response is to sue for malpractice, which lawyers don't like. So the more you can get ahead of that whole process, the better off you're going to be. All right, so that was a little bit of a long-winded answer. Any other questions? All right, thank you, everybody. And again, please reach out and let us know how we can be of help to you. Thanks all. We will catch you next time.